Reliance is the stock in focus. It's down 3.5% now after its earnings and single-handedly dragging the index. Jal Irani is joining us, Senior Vice President, Institutional Equities at Edelweiss, someone who has been tracking the stock and sector for better part of last 3 decades. Jal, good morning. Thanks a lot for joining us. Always good talking to you. So, how to approach it now? Because the street was factoring in some real blockbuster number from the O2C business, which didn't come about. Obviously, the overall numbers year on year still look good, but maybe the expectation was much higher. But your view?
So, look, there are always plenty of contours to Reliance, and especially during the results. Firstly, on the results itself, yes, the results actually are good. Needless to say, the market was expecting even more. The issue there was that the market was not focusing on the cost side at all. So, despite very high gross refining margins, the fact is that costs have also increased. A lot of the energy cost increase goes into refining and chemicals, which the market chose to ignore. So, therefore, there's a bit of a disappointment. But the bottom line is the results are good. Secondly, that irrespective, if you see the trend, generally the stock goes up before the results and falls after the results in any case. So this time it's no different. And the way to look at this is beyond sort of this trading. Okay, actually the third thing also is that currently its most significant driver, which is GRMs, have gone from $30 to near zero within a span of 3 to 4 weeks. And yet you've got a huge windfall tax of $4 a barrel. So that windfall tax has to go, because not only is it impacting earnings dramatically, and there is no windfall anymore. In fact, you're making losses. Arguably, to that extent, it should be, in fact, instead of a windfall tax, the companies should be compensated now for the losses that they're currently incurring. So hopefully the needle should swing both ways. But I think as a combination of that, the near term, unfortunately, doesn't look very good. Longer term, things don't change dramatically, because even if you factoring in the windfall tax impact is about 1.5 rupees a month. So even if the windfall tax stays for 6 months, arguably you're talking about a downside of 6 to 10 rupees, 6 to 9 rupees basically, which is not a lot. So the longer term drivers remain, but yeah, there are short term headwinds, especially the windfall tax.
Jal, hi, good morning. Prashant here. Just a quick word on what's happening to Singapore gross refining margins and what it means for the oil and gas business for Reliance going forward. I mean, in June, GRMs were at about $25. They're $1, $2 now. Apparently, gasoline cracks are down big time. What's really going on, in your opinion, and what's the way forward? I mean, a couple of months back, I read a lot of stuff which said that, gasoline cracks are essentially going to remain pretty high because of structural issues and not enough spare capacity and stuff like that. But is that changing very quickly? What's going on?
So in the short term, gross refining margins have always been extremely volatile. Now the difference, nevertheless, is over the last year, GRMs have become even more volatile. So you may recall about a year back, or a little more than a year back, gross refining margins had even gone to negative, which was unheard of. And then a year down the line, to everybody's surprise, it topped $30, which was again unheard of. It crossed all-time highs. So we live in very volatile times. Now, what has happened at the moment, while inventory levels in the chain still remain rather low, gasoline especially, we are now beginning to come, the inventory build for the US peak driving season is shortly going to get over. In fact, it's pretty much over. And the hurricane season as of now, and gasoline is a US driven market, the hurricane season, we've not heard of anything significantly untoward. So therefore, that in particular is impacting. Refineries also globally, because of super margins, were running full blast. What I do believe that shortly refineries are going to go into maintenance shutdowns, which they were postponing for a fair bit. So bottom line is that you are seeing margins plunging, but I don't believe that that's going to last for too long. You will shortly see a bounce again.
Okay. The next big thing to watch from a stock point of view is the AGM, right? There are expectations that there will be more disclosures on the new energy and financial services business. What is your thoughts on what to expect from the AGM, and on the stock itself? What do you see as the move now?
Well, I mean, I think in addition to the new energy side and potentially even financial side, I think Reliance is going to talk a bit about their real estate business also, because as you'll recall in BKC, they've now gone live, I think, since April for their not only mall but their convention center. They, in my opinion, depending on how the 5G bidding goes in the next few days, there may be some talks about that as well. I mean, I'm needless to say they'll talk a bit about retail as well, but I'm just wondering for the moment how well that is going, because you would have seen that actually the profits are tapering off fairly quickly on that front.
Okay. And your target price on the stock now?
From memory, it's about 3,200 odd, and I don't remember the exact figure.
Okay, 3,200. All right. Thanks a lot for joining in, Jal. Have a great day. That's Reliance Industries. The numbers, the profits at least were below what the street was estimating. But most brokerages have target prices of anywhere between 2,500, 2,510 is Credit Suisse target price, all the way to 3,250, which is Morgan Stanley's target price, which is the most aggressive on the street. But let's move on now and talk about Bandhan Bank.